Hi everyone, in this video I'm excited to bring you another installment of my Q&A with Wall Street series. In this episode I'm going to bring you Qualcomm and their Q&A session with Wall Street investors. So let's get right into it. First question comes from Matthew Ramsey from Cowen and Company asking about, are you guys seeing the weakness that's been there in global and low mid-tier Android? Do those ASPs, which stands for average selling price, start rolling over, or is this a unit dynamic and you're seeing ASPs hold up well? Okay, so interesting question. And the answer comes from CEO Cristiano Aman, who says there's a combination of weakness of demand, which is related to basically the macroeconomic headwinds and the prolonged COVID in China that has kind of singled out the China market, has been also down as the major factor. Goes on, you have a situation that you had a lot of demand and supply constrained environment, so companies across the board had much higher inventory policies. When supply chain got resolved, then you get that with the macroeconomic uncertainty, you have a drawdown and trying to bring inventory to a different level than it was during the situation of demand constraint. So essentially what happened earlier in the pandemic, there was a boom in customer demand as governments worldwide sent out stimulus checks, and so many other non-essential businesses were closed, so consumers had fewer places where they could spend their money, and so demand for these types of electronics increased, and so there was a shortage, and so companies overreacted to the shortage and built up inventories to make sure they had what customers were looking for. And then as economies reopened and consumers started spending their money on away from home experiences instead of things that they could consume at home, that created a decrease in demand, and supply chain constraints eased, and so businesses did not feel like they needed so much inventory, and that's led to this situation now with the headwind of companies trying to decrease the inventories and so many companies having inventory gluts that they're trying to get rid of. So that was the first part of the question. The second part of the question relating to average prices, uh, the CEO is saying actually, as we go to the next generation, possibilities for ASP to increase because we're actually increasing processor content. So they're moving on to the next generation of technology, and that next generation of technology, they're going to be able to generate higher average selling prices because they're increasing the content inside of those processors. So that's good news for Qualcomm investors. They're actually going to see average selling prices increasing even as demand remains muted, and then that's going to especially be a boom for the company as demand accelerates and average selling prices increase. The CEO joins in and says, I'm sorry, the CFO joins in and to answer, what we saw in the September quarter through our license reporting is weaknesses across tiers and region. So the CFO wanted to highlight that the weakness was not just in the lower tier or higher tier Android devices. They saw weaknesses across tiers and across regions. So the weakness was spread out everywhere. There was no one region that was especially, there was no one tier that was especially weak. And then Matthew Ramsey asks a follow-up, how should we think about next fiscal year? And the CFO jumps in and says, our planning assumption is that the weakness in the market lasts through the fiscal year. So this weakness that started in I would say early to mid 2022 is going to persist throughout 2023. They're not expecting any kind of relief in 2023. At least that's what they're planning for. And if there is relief, then that's upside benefit. But for now, they're not expecting that at Qualcomm. The next question comes from Samit Chatterjee from JP Morgan Chase. I can start on IoT, the Internet of Things, instead of smartphone. How should we really be projecting that forward? And the CFO jumps in to say, so we've gone from 3 billion in fiscal 20 to 7 billion in fiscal 2022. So that's incredible growth there. We're definitely seeing the impact of that on consumer and in some ways synonymous with handsets. Edge networking, however, is holding up for us, and we're seeing some minor pockets of weakness in the industrial side of the Internet of Things. So that the Internet of Things business is growing very rapidly for Qualcomm. It's more than doubled since fiscal 20, and they expect that to continue. Although there is some pockets of weakness in the industrial side of the Internet of Things. And then there's a follow up from Summit asking, when you think about fiscal 2023, what are your planning assumptions when it comes to content gains or market share gains? And how confident are you of the few of OEM's original equipment manufacturers not sort of sticking to prior generation chipsets just to be able to optimize the price to cost equation here? So I mentioned earlier that they're releasing a new generation of technology with greater components inside that they're going to charge higher prices for. And Summit is wondering, what if the OEMs just choose to stick with the older semiconductors in order to just pay lower prices? And the CEO jumps in to say, but you should assume that the mobile market is going to continue to do its thing, and we're going to have a product cycle transition. We expect in the March quarter also to see the benefit of our increased share of Samsung. So they're expecting continued upgrades to the product cycle. They're not expecting the OEMs to stick with the older chips. They're expecting the transition to go ahead and go through. No alarming trends in that regard. So that's good news for Qualcomm investors. All right, so I'll end it there. That's all I've got for this video. Thank you for watching, and as always, I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.